We're back again on Forex Chases 2.0. This is the next episode, and on this episode, we're actually going to be taking a look or a deeper look into how to trade a breakout. So, one thing that I'm going to be saying is that firstly, you need to understand the overall trend, the overall trade or the momentum on a given pair. So trading a breakout is not just like having a line and when it breaks out you place a trade. No, you need to understand the overall momentum, the overall trade on a given pair. Okay, so the second one that you need to do is that you need to determine the pattern price has printed and to which direction that price normally breaks out to. So let's say if you've got a descending pattern, we know descending patterns breaks up to the upside. So it wouldn't make sense for you to take a breakout that breaks out to the downside when the pattern actually indicates that it breaks out to the upside. You understand? So you need to know, look at the price pattern, understand the pattern, as you do know that we focus and master these patterns. Understand, and then once you see that it breaks out to the upside, when that breaks out happens, like when it does break out of the price after those multi-touch, obviously we need those multi-touch confirmations too. After it does, that's when you can see yourself trying to enter this trade. Thirdly, you need to take a closer look at the multi-touch. That's one thing that I mentioned, multi-touch confirmation, to be able to see the third touch, because normally in an ascending pattern, if price gives us third touches to the resistance, it is more likely to now approach the support and break it. Vice versa on the resistance. So what this means is that in an ascending type pattern, let's say a rising wedge, after price gives us third touches at the resistance, most likely it's about to break to the downside when it approaches the support line, and vice versa with the resistance. So I'm going to be showing you a bit deep on that too. Okay, now let's move on to the fourth point. Allow yourself to confirm a breakout with an impulsive candlestick to show belief in the momentum. So breakouts, normal with the breakout, you shouldn't take a breakout if, let's say, it broke out, but the momentum, the candlestick is not so much, like it's not engulfing as much. The body should actually cover the wicks. That's when it shows us that there's a lot of momentum or a lot of money to the upside. We need to be on the side of where the market is actually going. Let us jump onto the whiteboard, and then I'll be showing you guys a few examples of what it is that I'm speaking of. So now we are going to be taking a look at the whiteboard and seeing how we can actually jump onto the breakout strategy method. So basically, I like using the higher highs and higher lows because I started with it. So I want us to focus on one thing till we just go back. So basically, what will happen is that, let's say market pushed upwards, came back downwards. The same thing applies on the lower lows and lower highs. It's just vice versa. Higher high, higher low, higher high, now higher low. Okay. Higher low, as you can see. So what happens would be that breakout strategy would be you basically just, okay, let me just go all the way to the upside. As you can see, higher high, higher low. Basically what you have is that you have a pattern right here. You have a pattern right here, and then as you can see, market is pushing upwards, but on the bigger time frame, we are looking for an impulse from there going down. Do you understand? Like, we are looking for an impulse coming from the upside going downwards. We are actually looking for what pattern is this. Okay, yes, it's an upward trend here when you're looking at it from a smaller time frame, but you might find out that on the 4-hour, this is just a continuation pattern to the downside. And this being our first touch, second touch, third touch, this being a third touch, it's a multi-touch confirmation too, so it adds up to what it is that we are saying. So as soon as it gets here at the third touch, normally what the market likes to do is that it breaks out of structure at third touches. So as soon as it gets here, one thing that you'd say is that you just wait for a pattern. Then you can either take a breakout there at the pattern, but normally people are scared to take this breakout, so you can wait for price to break out of this structure, and then that's when you can look for yourself, look to actually tackle more opportunities as soon as it breaks out here. But one thing that I would say is that normally when the market breaks out like this, okay, let me just do this, it's a bit messy. So when the market breaks out, okay, we had this, okay. Okay, so when the market breaks out, normally you find out that price was giving us a previous support area. Price is giving us a previous support area. So you have to be careful that also this doesn't happen. It doesn't go treat it as support and then go all the way upwards. So to just have a full breakout, you should be able to just allow, as soon as it breaks out, you also break out the support area. this has confirmed that it broke out all the supports, because it broke out the trendline support, also broke out the horizontal support. So this is a solid one. And also make sure that it breaks out with the candlestick being as impulsive as possible, because that's one thing that we need. We need it to be as impulsive as possible. And normally, let's say we have a flag, it's like this, okay? Then it does this. Normally, after the first touch, second touch, now the third touch. Normally, after 3 touches from, let's say the downside, since this is a breakout to the upside, there's higher chances of it breaking out. You understand? There's higher chances of it breaking out if it's a descending type pattern. And if it's an ascending type, let me just do this. 1, 2, the first one, second, third. If it's something like this, normally what happens is that this would just result to a breakout. There's high chances of it breaking out immediately here, because we've got our first touch, second touch, and also third touch. So this is how you are able to spot breakouts before they occur. You have to make sure that they give you multi-touch confirmation. Sometimes it doesn't have to be multi-touch confirmation. It can give you something like a double top, like instead of multi-touch, it can give you a double top. But as long as it's a pattern that you understand, like I just threw something that I don't understand, yeah? But like, let's see if it's, okay. There we go. Okay, we'd be looking for, firstly we'd be looking for this, né? This is what we'll be looking for. We'll be looking for, this was first, second, we'll be looking for the third touch here. But also allow yourself on the forecast, topic that we speak of, allow yourself to understand that the market is not perfect. There's chances of it creating double tops. Double tops are also reversals, and this pattern is what? It's a reversal. So this can also be a confirmation of you believing that on the next breakout, this is gonna go all the way to the downside. You can take the breakout here, or just allow it to come all the way here. Okay, and we're gonna also cover the retest method on the next topic. So this is how you can attend the breakouts. Know the multi-touch confirmation with reversal patterns to see if the breakout is ready to occur. Don't just rush a breakout. Don't just because you have a trend, just because you have something like this and it done this, then this, then this, then it does this, then you think it's a breakout, because like all of the, like you should actually have evidence of what it is that you're saying, because this can work out. It can work out like 1 or 2 or 3 times, but is it guaranteed to work in the long term run? Is it a successful strategy that you can use? I'm not sure, I don't know, but I'm just tested out your side, and then let's see what works. But let us jump onto the charts and see what it is that I'm speaking of. Complicate this, like complicating the whole breakout method. Like, instead of just understanding that this is actually a breakout is when you have support lines or resistance lines, and then when it closes, a candlestick closes massively, let's say below or above those structure highs or lows, that's a breakout. It broke out of previous structures. So actually, but you need to have points in order to be able to just take successful breakout trades, such as this first one. We need to understand the overall trend. The overall trend, as we can see, is to the downside. So just by understanding the overall trend is going to help you be able to know that a breakout that's going to the downside is actually a continuation pattern instead. So just by understanding that, let us move on to the 4 hour, so we can look at the second point which states that, like, secondly, you have to determine the price pattern has printed and to which direction that pattern normally breaks out to. So basically, this is actually a pattern that has been printed by the price. Like, let's say if you're in a downward trend and you spot a descending type pattern, it means it breaks out to the downside, which means that that's actually a descending type breaks out to the upside, which means in a downtrend, a trend that breaks to the upside is what is actually a reversal. You understand that structure, né? So just by taking a look at this is actually an ascending type. It's an ascending type, and with our ascending type patterns, something that I like is that we're able to spot that this eventually is going to break to the downside, because you can even see we capitalize a few more trades on it. But by taking a look at the third point, the third point speaks about multi-touch confirmations. So the first touch, which is being here, second touch is here, the third touch is strictly somewhere close to here, and within structure we've got patterns that are patterns within structure, like our first touch here, second touch, and also third touch. And remember, I always speak about candlestick confirmation, waiting for that entry that confirms. And as you can see with just this candle here, it is confirmed with this beautiful, huge engulfing candlestick, which shows that there's a lot of momentum to the downside. So this is actually how you capitalize on breakouts. Like, let's say just by looking at the first the first point we covered it, where we spoke of like the trend. You have to just see the overall trade. And the second whereby we just speak about the pattern to see where this pattern normally breaks out to. And the third one is like the multi-touch confirmation to see what actually is what point are we on, because normally after the third point, that's when you can expect a breakout. That's one thing that I wanted to mention. Like after third points, that's when you can start expecting breakout. So let's say, for instance, this is our first target, our first point. This is our second, and if price gives us a third point, like how it did here, you should start expecting a breakout to where it's going, like, or to the direction that price or that pattern breaks out to. You should start experiencing a breakout, even if, let's say, it's like something different. It's price is pushing to the downside, price is pushing like this, and like this. So normally we'll have this, obviously first point, second, and this is the third. So what you can do is that you can expect a breakout here going all the way to the upside, because already price has given us those three touches that we need. We need the multi-touch confirmation, which are three touches, either on support or resistance, depends on what you're looking at. So now after we've seen this, you can see how impulsive this candle took out. It broke out to the downside. Perfect way to place sell stops, or perfect way to just enter with market execution. So let me just go on the 1 hour time frame to show you guys how I was able to take some of these. Just by taking a look at after that huge H4 impulsive movement, we also experienced a correction. After this correction, obviously I just had my trend line here, and as soon as this candlestick closed below, I placed my sell stop somewhere close to here, and then price went the double top formation, went back down, activated me, and then went straight into profits. This is how to actually take breakouts. You wait for a candlestick to close below, like even here, if you want to take a sell here, you wait for a candlestick to close below, and then you place your sell stop below here. Stop loss would just be above somewhere here, and then you take it all the way, and you have to allow yourself to confirm a breakout with an impulsive candlestick to show believe in momentum, because you can't really say it's a breakout but the candlestick is not as impulsive as it should be. It has to be impulsive. This is a breakout. Let me show you another type of a breakout. I took another sell here because this is a breakout. You see how this candle closed below. It closed literally like here, super impulsive. And take a look at the one that I just took today, just like this, super impulsive. As you can see, price like literally just broke out impulsively. So these are actually the moves that we are looking for, and I want you guys to be able to capitalize just looking at the breakout method. But let's move on to the next lesson and speak about the retest method.